Welcome to your daily stock market summary from MarketSnap. What a week, folks. If you blinked, you might have missed it, but the market just pulled off a remarkable comeback. All three major indexes finished in the green for the week, and that's a feat that seemed impossible just a few days ago. We saw some serious headline risk, a potential geopolitical game-changer, and a mega IPO that's already reshaping the landscape. Let's break down exactly how this happened and what it means for your long-term portfolio. So how did the day end? The Dow Jones Industrial Average closed at 51,202, up 0.7%. The S&P 500 finished at 7,431, a solid 0.5% gain. The Nasdaq Composite added 0.3%, closing at 25,888. And the Russell 2000, our small-cap proxy, led the way with a 0.8% pop. The real story, however, is the VIX, the market's fear gauge. It plummeted over 9% to close at 17.68, a clear signal that the panic of the past few weeks is rapidly dissipating. The main catalyst for this turnaround? A potential peace deal between the U.S. and Iran. The headlines were flying fast and furious. President Trump called off planned strikes on Iran, and reports emerged of a draft memorandum that could reopen the Strait of Hormuz and lift oil sanctions. This is a massive development for energy markets and global stability. The biggest beneficiaries of this risk-on mood were the tech and semiconductor stocks that got hammered earlier in the week. We saw a massive relief rally. ARM holdings surged over 11%, Intel jumped 6.5%, and AMD rallied nearly 5%. SanDisk, Seagate, and Western Digital all posted strong gains of 5% or more, as the AI-driven memory demand story remains intact. But not everyone got the memo. The losers list is a fascinating look at the rotation happening right now. Adobe fell nearly 7%, hitting its lowest point in 8 years, as the market worries about its AI monetization strategy. But the real carnage was in the space sector. Virgin Galactic crashed over 31%, Rocket Lab dropped 11%, and AST SpaceMobile fell 15%. This is a classic sell the news event, as SpaceX's massive IPO sucks all the oxygen out of the room for smaller space stocks. Speaking of which, let's talk about the elephant in the room, SpaceX. The company made its historic public debut today, opening at a valuation approaching $2 trillion. Robinhood reported record-breaking traffic as retail investors rushed to get a piece of the action. For the long-term investor, this is a pivotal moment. While the hype is real, some analysts are warning that this IPO could mark an intermediate top for the market. It's a great reminder to stay disciplined and not get caught up in the FOMO. Looking at the weekly performance, the rotation into value and defensive plays is clear. FedEx Freight was the top weekly gainer, up over 14%. U.S. Foods, Dollar General, and Kraft Heinz all saw strong weekly gains as investors sought safety in consumer staples and industrial names. On the flip side, the worst performers this week are a who's who of high-flying tech. Supermicro was the biggest loser, down nearly 29% for the week. Oracle, AppLovin, and Adobe all tumbled over 15%. This is the correction we've been waiting for. It's painful, but it's healthy. It shakes out the speculative froth and creates better entry points for disciplined investors. The sector performance tells the same story. Over the past week, consumer cyclical and basic materials were the top performers, while technology was the worst, falling over 4%. Energy also lagged, down nearly 3% on the potential peace deal that would send oil prices lower. Looking ahead, next week is a big one for earnings. We have reports from Oracle, Adobe, and RH. Oracle shares tanked despite a beat as heavy AI spending and dilution fears overshadowed strong cloud growth. Adobe also beat estimates, but its guidance disappointed. RH reported mixed results with cautious Q2 guidance. These reports highlight the intense scrutiny on AI spending and the transition from hype to profitability. You can find exclusive earnings transcript summaries on MarketSnap. The macro picture is also heating up. The Fed is expected to hold rates steady next week, but the focus will be on whether they leave the door open for future hikes. New Fed Chair Kevin Warsh is already breaking with tradition, suggesting central banks don't need to telegraph every move. This creates a new layer of uncertainty for the market. Meanwhile, the Bank of Japan is poised to raise rates to a 31-year high. So what's the takeaway for the long-term investor? The market is in a tug-of-war between a strong fiscal impulse and a hawkish Fed. The data suggests there's a 68% chance the market ends the year higher. The key is to ignore the daily noise. The AI build-out is still in its early innings, with estimates suggesting $5.2 trillion in data center spending by 2030. The correction in tech is creating opportunities, but you have to be selective. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown helpful, hit that like button and subscribe. We'll be back tomorrow with another deep dive into the markets. And don't forget to check out MarketSnap for exclusive SWOT analyses and earnings summaries to help you make smarter, long-term decisions. See you next time.